Good evening, everyone. And in today's presentation, we will be talking about the technical blueprint, how to generate big and above average profits trading only 2 hours a day. This is dedicated for futures trading and is also applicable for stocks. Um, my name is Anka Metcalf, and I am the CEO and founder of TradeOutLoud.com, which is a trading education firm that is specialized in educating individuals how to day trade and swing trade and actively invest the future in the futures and the equities market. I've been doing this for the last 18 years on my own. I specialize in high velocity moves. And before I came into this business on my own, I came with 10 years on investment banking. I'm the designer of an institutional proprietary trading system that is based on price support resistance, 8 layers of price support resistance to be exact. Specific trigger times, because I've been trading for so long, I know some secrets and I know some places where the stocks where the futures market are going to start having accumulation points, are going to have having some deflation points, etc. And I correlate this with specific price zones. There are 4 specific price zones throughout the charts where institutional traders leg into trades or scale out of trades. I also focus on chart synchronicity and divergency. And again, today and yesterday was a very good example for that because we had relative weakness from the tech stocks. So there was quite some rotations that happened from the tech sector into energy. We saw that oil, this is also due to OPEC, but there was a lot of rotations and a lot of money that came into energy stocks and in particular into oil. And I also apply a strict set of trading rules and a 10-point scoring system that enables myself to make trading super easy and super fun. We brought the fun back to trading, by the way. We made trading fun again. All right, so if you guys want to learn more about Trade Out Loud, you can head on to our website, and also you can head on to social media and you can follow us. Our handle is Trade Out Loud. Here's my agenda for today. Today, we will be talking about some basic concepts that you think you knew, but you really didn't. Also, how to prepare and how to pre-plan for your trading session. I only trade the first 2 hours of the New York trading session and then I'm done. But today, because I was here and I was listening to all of the presenters, guess what? I did some afternoon trading as well. So it's so empowering to learn and know how to trade. Trading is not only limited to 2 hours a day. The methodology that I use is not only for 2 hours a day, so you could trade it around the clock, and you know that the futures market is open close to 24 hours. How to select what to trade for better opportunities and for better follow through. We're going to talk about that, and what time frames to focus on when you're trading the open. This is a big one, right? Because everybody wants to know, what are you looking at when you day trade, right? And this is something that I'm going to share with you. It's actually a slide. It's actually a trading plan in a slide, if you will. And then we're going to talk a little bit about risk tolerance and versus risk to reward, which is so important because you need to have a certain risk applied to each and every single trade so you're not all over the place. All right. So depending on the difference between the entry and the stop, you need to position size. And if you don't know how to position size, well, actually, we can teach you how to position size as well. This is what I do every single day, teach traders how to trade and increase their accounts. All right, so this presentation is for traders that want to achieve above average gains, power trading the futures markets. Trading 6 charts, 2 hours a day, literally stress-free. Literally stress-free. This is what we do every single day. I can teach you how to become a master trader, be confident in your trading decisions, be accurate, know exactly where your entries are, where your stops are, where you're having your targets and how to react into targets. So everything with mathematical precision and accuracy, how to be disciplined and wait for a pattern formation, because guess what? You have a pattern, you have a trade. You don't have a pattern, you don't have a trade. I see traders all the time that jump in trades and then I ask them, like, why did you get in that trade? And it's like, oh, I didn't have patience to wait for the trade. It's like, why? There's no pattern. If there's no pattern, there's no trade. So you have to be extremely disciplined. And you're going to see how being disciplined in trading is going to discipline your life. And I'm not kidding. You're going to be very organized. You're going to clean your desk. And I wasn't always like that, but I was always very organized. But now with trading, is you're almost you're almost going a little bit compulsive into being disciplined, and you need to be disciplined, because if you're not disciplined in trading, everything is going to go bad. You need to be patient. Patience is going to play a major role. There are certain times in the market where you are going to see a reaction in price. Certain times that I'm going to share it with you today, where you are going to see things starting to happen and patterns start to form, volumes start to increase. Also, you need to be in control completely. Confidence, right? The confidence and in control go hand in hand. And when you get in a trade, you have to know exactly how you're going to react if the trade is going against you. Obviously, you have to have a plan. If your plan is to stop out, or if your plan is going to use half the size and you're going to, for example, if you have a secondary support level that is really close by to your first support spot, where you initiated the trade, maybe you decide to take the trade with half the size and double the stop, right? So on that particular secondary support, if you're watching for a rotation, then you can add on to your trade. That doesn't mean that you're going to add on to a losing trade. It means being smart and trading like a hedge fund. And also be very knowledgeable. You need to know a lot about trading, and there are not a lot of things that you need to know about trading. Trust me, you need to know technical analysis, patterns, and trailing and money management. That's it. That's all you need to know in trading. And this you can learn how to trade, and then this is never going to go away. You're just going to get better and better and better and better, and you're going to go from a little snowball to a huge snowball where you're going to get all the massive profits from the market. You're going to learn to trade stress-free, because you're not going to be stressed and say, oh my God, I didn't take a trade today. I need to have a trade. You don't have to have a trade every day. And in fact, you know, markets like yesterday and the day before yesterday, I came into the trading room and said, guys, I don't see anything. I don't even know if we're going to have a trade today. Today we had another massive day. Yesterday we had a massive day. The day before we had a massive day. So we've had some really phenomenal trading opportunities deriving from really crappy markets. You need to be happy when you're trading. We talked earlier with Mandy. And you need to have that positive attitude, because if you're not coming in the market with the positive attitude and say, oh, I hate what I'm doing, and you take a pen and you start scribbling, or you go through social media, go like, oh, look, so-and-so is in Cancun and I'm here looking at candlesticks. That totally sucks. All right. So you can be better than that. Be happy when you're trading, because you have the opportunity of a lifetime. Think about all these individuals that had to go to work during the pandemic or are without a job. Obviously the individuals that are, you know, the essential workers that had to go to work. And think about those individuals that are without work right now. Think about all the lives that were destroyed. Think about the businesses that were destroyed. Think about, you know, all the California, like I'm in Florida, and here, you know, we did not see any kind of effect. Because we opened very early on. We're like full capacity. We have been full capacity for a very long time. But think about states like New York, you know, like California. And in fact, you can see them coming to Florida here. But anyways, so be happy that you're trading and you have this opportunity, and embrace it. Trading is awesome. And once you learn how it's done, you're going to love it. You won't look back ever. And again, feel fulfilled, because you are privileged to trade. Think about it. So many individuals right now have no idea that they can trade without having a trading account. There are prop accounts that you can sign up for. There are so many opportunities right now that were not around when I first started trading. So this, if you want to start trading, you have no excuse not to excel at trading. You will know when to trade and when to sit on your hands. It's very important that you need to know, and this is coming from discipline and from patience. You will trade in the zone. So when I trade, I don't look at my phone. I'm not watching TV. I am not watching anything. I'm not reading anything. And in fact, my desk is completely clean and clear. I don't even have a pen on my desk. It's just my mouse. So I don't need any kind of distractions, just my screens, my mouse, and that's it. Okay. No distractions. You will make money in trading. If you're applying the rules, I have no doubt everybody that is in here in the room, it shows that you have commitment and you're dedicated to trading. There's no excuse. You are going to make it trading, because the fact that you're here shows that you're so interested in taking trading to the next level. You will grow your account. You will, because it's all a matter of flipping that switch, learning how to become profitable in the market and take advantage of the market opportunities. You will start creating an income, and of course, you will generate wealth. You will learn when to go long. You will learn when to go short. You will learn when you have to wait, and you will learn to identify winning patterns. Because the bottom line is that trading is easy because it's a rule-based system. I teach my traders in my classes how to trade based on rule-based system. If the trade, for example, if the price is hitting a certain pattern, it at an exact time with the volume coming in and with everything. So there are certain conditions that we need to meet. It's a long. Or if it's in a downtrend, if it meets our conditions, then it's a short. I will show you my charts. Today, I played both facets. I made money going long. I made money going short. It was one of those days. And I will show you how easy it is. And once you learn how to use technical analysis to your advantage, there's nothing stopping you. But you have to wait for a setup to form. It's not just buying off support, because today, if you would have bought on each support spot, you would have been dead, done. Okay. So you have to wait to trade with confirmation. You will learn fine and precise execution, because it's all about that laser sharp execution. Where's my entry? I need an exact entry. I need an exact entry. I need an exact stop. I'm not playing around. It either meets my entry criteria or my stop criteria, or I'm not trading at all. I'm not winging it. Trading is not about winging. Trading is about math, because these algorithms are using equations. And we know exactly where the burst in volume may be coming in based on these patterns. And we get in the trades with institutional power. We don't wait. We don't wait to see, oh, confirmation. We don't seek approval. We don't want to look to anywhere else to see if there's a block trade or if no. When you're trading momentum, you want to make sure that you get in the boat with the suits at the same time. Okay. Also, you need to know money management skills. So how are you going to react when the price is going to hit target one? What are you going to do then? What are you going to do? Take it off the table? Are you going to leave some in? Are you going to start? I mean, what is your plan? When it hits target two, what's your plan at target two? What's your plan at target three? What's your plan? I mean, you have to have a plan. Patience. Patience is very important, because you need to have that patience to wait for the pattern to form. You need to wait a lot. Trading is about 90% waiting and only 10% execution. So bottom line, why are we all here? Because we all want more money. We love money. I love money, and money loves me back. That's why money keeps on coming to me, because I love money. I'm attracting money because I know where these buy spots are or these sell spots are. So I love grabbing money. It's about financial independence. It's about empowerment. You can supplement your income, create an income, or create wealth. Trading is a recession-proof, pandemic-proof, economic-proof job or skill. And it's going to take you a little bit longer to learn and how to master it. But the fact that you're here right now and you're starting and you're gathering all this information from these amazing presenters that we have had during these 4 days, it's an unbelievable a baggage of information that you have just accumulated right now. Trust me, you will make money. Just respect the rules. And you only need to learn it once. Like I said, it's just like riding a bike. And it's only going to get better because you're going to fine tune it and you're going to add on nuances. It's just going to be fantastic. So why learn how to trade? First of all, financial independence. Don't you want to be financial independent? And, we don't care. We don't care what's going to happen in the market. Market going down. So what? We're going to short. We're going to make money faster on panic. You can be in control over your money, be in control over your life. You are going to work from home. I mean, I used to commute and it would take me 3 hours a day just driving, an hour and a half to go to work and an hour and a half to get back home. I hated that. So 18 years ago, I said, done. I'm done. I'm done. Now I trade less than I would commute. So that's really something that was really worthwhile. It's scary at the beginning because I literally went cold turkey. I just quit my job and I said, I have to make this work. Okay. I have to pull a paycheck out of the market. And I pulled paychecks out of the market for about 3 months. And then I became complacent. I said, I want to look for the easy route and I want to get it easier, and I was looking for the holy grail in day trading. Now I was doing really well because I was implementing all my knowledge from higher time frame trading, from, hedge funds, for everything else, and all of a sudden I go like, oh yeah, there should be a crystal ball out there. Oh, surely enough, I found tons of indicators. Okay, I did. And I bought them. I bought also a membership to a newsroom that would deliver the news before it hit the wires. I don't know, that made me empowered. That's like, oh, wow, I can react to that news. Can you imagine? So if there's an upgrade or if there's a downgrade, it was baloney because I lost so much money within the next 3 months after I was profitable for 3 months, because not only they erased all my gains for the previous 3 months, but I was actually down. So it took me another 3 months to ditch everything that I have bought, erase everything, start from scratch again. So I started to make money by doing exact technical analysis, hard work. That's all there is. Okay. That's just my experience. Maybe you have an indicator that is working for you. That's great. I'm telling you from my experience, I've tried many indicators, and I even had traders that came to me with many indicators that I tested and I looked at, and it's like their performance is really, really bad, really sucks. Plus you're trading someone else's concept of trading. And oftentimes these are programmers and they don't know as much as we do in the market. And also customize your trading hours to fit your lifestyle. So I only work until 12 o'clock because guess what? I do other things from 12 o'clock. I want to be in control of my life. So like I said, 3 hours and done. That's it. 2 hours, actually 2 hours and done of trading. Whether you want to pay off your mortgage, pay off your credit cards, pay off student loans, take vacations, spend more time with your family, or maybe not. Maybe you're sick right now because you guys have been together for a year? Okay. So I was like, oh my God, is my husband going back to work? It's like, oh my God, when is he going back to work? So, it's just like, I need my me time. So that's what it is. It's a combination. So it protects you. You feel protected. So learn how to trade. I focus on the sweet spot, which is the overlap of the London session within your trading session, but you could generally trade throughout the trading session. I'm going to share some trades with you because I was here and I was listening and I was like, oh, I just need to do something. And my love for the markets, I always have my charts on. It's like, oh my gosh, this is such a great opportunity. Let me hop in. All right, so this is what I trade. I day trade the indices, primarily the indices, the Dow, the S&P, NASDAQ, and Russell. And I primarily swing trade all the other elements that you see are on the charts. Crude oil had a really nice move today. We had the OPEC meeting today. Also, you could trade gasoline, heating oil. I particularly like to trade all of the commodities for swing trades. By the way, soybeans are actually very interesting right now. They're range bound, so they're definitely worth a watch. Lumber was on fire this year and last year. I mean, lumber is just extraordinary. And these are some numbers that I pulled out today from the heat map. I want to show you how, what we traded today in the trading room and what I traded on my own. And obviously, I'm pretty sure that all other traders that, we have mentored and have educated and still want to trade the afternoon trading session saw the same things that I did. So we're using old school levels, but we're using confluence spots. You can see some lines that we have here on the chart, some red lines, some green lines. The red lines are support areas and the green lines are resistance spots. But there's one thing that you need to know about these areas, and we see some dotted lines as well that represent also supplementary support resistance. You can see some purple lines, which are confirmation to go long or confirmation to go short. You see this dotted line right here. This is confirmation that you got to short with both hands. Okay. All right. So these levels are not just simple support resistance levels. These levels are multi-time frame support resistance, and they're confluence spots. So I teach traders how to trace these levels in our classes. I wouldn't say that it's super easy, but in about a week or so, you're getting the hang of it. And they're going to help with your trading, because you can see here that if you see this chart, we had a push higher in S&P, for example. Okay, actually we did NASDAQ, but I chose this example because this is the trade that I did in the afternoon in the S&P. So I shorted it and then I bought the dip. And basically you have a rotation that is happening into support every single time. You have a and I'm going to show you some other charts as well. Every single time when you see that the price is nearing some kind of support spot or a confluence support spot, you're going to see an immediate reaction. So it's so empowering, because all I have to do, let's say if I want to go long, all I have to do is for the price to reach around this area and start confirming for me, starting going green to red. So having this rotation happen. And this is my entry candle right here. It's very empowering because all you have to do, and it works every day, every single day. Sometimes, we're getting a little bit of wash. So at those points, we're using hard stops, and probably the market has something else in plan. So that means that they're going to run into the next level. Just keep your hard stop, let the price run its course. If you're stopped out, you're stopped out. We have very little stop outs. My batting average this year is over 92%. So all my trades last year, the whole entire year, January through December, batting average was over 80%. And win ratio over 80%. Win ratio this year, like I said, over 92%. So we win way more times than we lose. That's how accurate we are into, and that's my accuracy into trading. And I rely 95% on 95% on technical analysis, only 5% on fundamentals, because I do pay attention to earnings. I do pay attention to, what's happening out there with the stimulus and everything. So we need to pay attention to these elements as well. But in the afternoon trading session, we noticed that we were still in an ongoing trend. We actually made a new high right here, which was conducive for a pullback buy. And we can see here that this is the 5-minute chart. We never had a 5-minute rotation. So for this reason here, there was a 5-minute rotation that happened, but was stuck into this 200 SMA. This is not a good idea. We had also a crossover right here. And this was a very problematic area. I didn't take this for the long side because we had a lot of weakness into it, although it was signaling a bullish rotation. And you're always waiting for the confirmation, and the confirmation came, but it quickly faded. So, once you see that the rotation is failing, you're thinking short because you're approaching more and more the support spot, and by rotating here, you're generating the first lower high. So this is the high, this is the first lower high. So therefore, you're putting the pattern into a descending. You're putting the price into a descending pattern. So this promotes selling along the way. And basically what I focused on is on market timing, time frame, pattern, and execution times. So everything to me is like, everything is set up like an algo. So I act and react as an algo. I don't have any emotions when I'm getting into trading. I know that I have to execute 1 to 3 trades a day. I know the timing when I have to execute my trades. Everything is on autopilot. And then all I have to do is wait for the setup. I'm seeing the setup, boom, I'm getting in the trade. I don't see the setup, I'm not entering the trade. Market timing, the market opens at 9:30. It's going to have a reversal time at 10 o'clock, and it's going to have another reversal time at 10:30. So I know that if the market shoots up, I have another slide for that. I know that if the market opens at 9:30, depending on where it ticks above the open or below the open, it's going to have some kind of impact on price. I'm using the following time frames, the 2, the 5, and the 15 minute. They're all correlated, and they all have to be in sync in order to move higher. And not only time frames have to be in sync, but all the indices have to be in sync. If there is one index that is divergent, okay, I wait and I wait and I wait, okay, until there's more confirmation in the market, until they balance a little bit. Because when indices are divergent and the market is opening, you're going to see a huge yo-yo action. And then you look for simple patterns, pull back, buy, and pull back, sell. I actually teach in my courses 10 trading strategies. That's right, 10 trading strategies. They're very easy, super, super easy. And execution times, I look for 2 enter trades around 9:35, 9:45, 10 o'clock, 10:30. Boom, that's it. So this is where I'm getting my 3 trades from, 1 to 3 trades. And depending on how the price is reacting, my favorite time is actually the 10:30. And lately 10:30 has been really great. Last week and this week, we have been trading the 10:30 reaction has been phenomenal. Or I try to focus on the first 5 and 15 minutes. We have a system, and the accuracy, like I said, we have a win ratio of this year of 92%. So we really know how to trade the open. The open is not for everyone. By the way, the open is also called amateur hour because that is when institutional traders are having fun with the retail traders, right? And they're taking taking their money away. So oftentimes we do the same, right? All right, so pre-market game plan. First of all, the market opens at 9:30. At 10 o'clock, we have a reversal time. 10:30, we have a trigger time. This is called prime time. Trigger time is the funnest time in the market to be, because trades usually set up at around 10:30. And if you want to wonder why, it's because they have a really good balancing, and this is the first hour of the day. This is price discovery from 9:30 to 10:30. So if the trade is going to start taking out the 10:30 high, it's going to go higher. If it's going to start taking the 10:30 low, it's going to go lower. Okay. And then from 11 o'clock to 11:30, the European market closes. I'm pretty much not interested, and I wrap up the room. Today, we were done early. We were done at 11 o'clock. I shut the room down. I mean, why? Why trade, right? Because you needed the price to calibrate, and the calibration came up a little bit later. So when the market opens, for example, if you're in an uptrend, the market opens at 9:30 and usually goes into a direction into 10 o'clock, right? So if it shoots straight up, and sometimes we have that, we open and bam, we went straight into 10 o'clock straight up. If you don't have a setup that is developing right off the open, just sit and wait. It's the best thing that you can do, and wait for the pullback to happen from 10 o'clock to 10:30. There's always going to be a pullback. This is the best kept secret right here, guys. If I were you, I would take a snapshot of this, and I will look at the market tomorrow to see how it reacts. And going in the next month, just try it out for a month. Okay. So depending on how steep or how shallow the pullback is from 10 o'clock to 10:30, then when the next rotation is yours, and you're likely to have a trend continuation going to 11:15 or 11:30, and then you're done. That's it. If you're having a choppy market experience, and if the price is gyrating up and down in the first 15 minutes, and remember, the more volatile the market is, this gyration, this yo-yo in the market is going to last longer. In 2018, when the market structure has changed, we had a wait time of about 3 to 4 hours. before the trend settled. And during the pandemic, the same. So last year, exactly a year ago, we would have to wait about 2 to 3 hours until the market just calibrated a little bit, calmed down a little bit, and then we would see some opportunities. We had huge opportunities. We made so much money last year in March. It was ridiculous. And then from this point on, once you get the breakout, continuation into 10 a.m., shallow pullback, and continuation into 11 o'clock. This is an example for, an example of a trade. Excuse me. Okay, I felt like sneezing. Okay, so this is the market from today, right? So what we had was a straight move up. At 9:45, there is a small minor reversal time that typically happens in the market at 9:45. So we did have that slow down. But then at 10 o'clock, what happens at 10 o'clock? At 10 o'clock, you have reversal time. So what do you think we did at 10 o'clock? This is us right here. We bought it. So we bought NASDAQ, and it went right into targets, and then we were out. I shut down the trading room. We entered this chop. We're done. I made my money. And again, you don't have to trade a lot. It was one trade. Okay. It was one trade. The preparation, you need to have a lot of preparation before you actually get into the trades. You need to check out economic releases. I never trade any kind of economic release. I check earnings, pre-market. I do my pre-market game plan. I trace my level, so I'm prepared when I'm coming in the trading room. There's a lot of responsibility that comes in the trading room because I'm not operating a trading room and saying, oh, this is the plan. We're seeing this is the trend. No, I actually call trades with precise entry, precise stops. It's 100% guided, so we know exactly what the heck we're doing. Okay. It's not like, yeah, this is kind of like the area where we're looking. This is a good area to go long. Well, an area could be 300 points. Don't get me wrong, but like, where's your entry price? What do you plan? Where do you plan on placing? Where do you want to place your stop? Okay. Where do you want to have your target? Oh, we see a resistance right here. Okay. No, in trading, you got to be exact. You either know what the heck you're doing or just go home. All right. We're not in the business, kind of to wing it. We're not winging anything. So you need to do your pre-market game plan exactly to the T and say, hey, if the market is going to hit this point, it's going to go here. And from this point, we buy it or we sell it or what the plan of action is. And we know exactly how we're going to trail it into targets ahead of time. So we know exactly what kind of trades we are looking at 9 o'clock before the market opens. And I don't trade before the market opens. Rarely that I put a trade on. Maybe once a year, twice a year. For each trade that you take and into that pre-market game plan, and this is valid for stock trading as well. If you guys are stock traders, you need to follow the exact same rules. Don't forget that I have switched to futures trading 8 years ago. But for 25 years or more, I've been trading only stocks, day trading stocks, swing trading stocks, investing in stocks. Okay. So you have to perform a multi-time frame analysis and you have to do it top down. Oh yeah, top down. If you see that I'm starting every single day with the monthly charts, weekly charts, daily charts, and then I narrow and I zoom my way into smaller time frames. Oh yeah, I look at monthly charts every single day because they're going to have a huge impact on smaller time frames. The volatility and the velocity of the move comes from higher time frames. It's not coming from smaller time frames. If you have blinders on, if you have just a tick chart right in front of you, you're going to see that really crappy price action is going to go like 1 tick higher, 2 ticks higher. Ooh, oh my God, a point or 2 points. Oh my God, no, guys, when you learn how to trade, you either know how to do it right or don't do it at all, because you need to capture these moves to make the time worthwhile while you're in the market and watching the market. Okay. So you can trade any time of the day, but go for high velocity moves. I mean, I don't know. Maybe you like to watch the market for 2 hours or 3 hours and get 3 points out of the market. I don't. I like to get 50 points or 80 points or 100 points from the market. And then you zoom in on the technical image and the technical execution. You have to determine your key inflection points. You have to determine key trigger locations. You have to determine relative strength and relative weakness if you're trading the indices. And of course, you have to correlate everything. So there's a lot more that goes into the technical charts. If you want to go for above average gains, you have to do a little research, not hard, not hard. Basically, you only have to do this. You only have to follow the steps that I just showed you. That's it. Typically, it takes you about 10 minutes to prepare. I mean, do you think that's a long time? I don't think so. It's 10 minutes. It takes me 10 minutes to trace the levels, get all the intel. That's it. Boom, I'm done. Okay. We're here into week 6. So you can see that the earnings season is really phasing out. And actually next week, next week is going to be sweet. Next week is going to be sweet because we have the rollover in the futures markets. That is going to create a lot of chop going for stocks. And traders that do not know how to trade this environment are going to get killed into the market. Just giving you a heads up. Just giving you a heads up because you need to be extra careful. We are heading, so starting with Monday, we're heading into a high gyration zone, which is going to last for 2 weeks. And then we're going to go a little smoother, okay, on price action. But just a heads up on that. Economic events, they're usually out about 8:30. And then you have FOMC, which is around 2 o'clock. We have the beige book, we have et cetera, et cetera. So there are some releases for the afternoon. Earnings first 6 weeks of the quarter are the busiest. And this is smooth, easy sailing because they're going with fundamentals. News releases, whether it's a healthcare reform, tax reform, tariffs, anything from Washington, anything national or international, economic events, geopolitical events, election, et cetera, everything's going to influence the market. So you have to have, like an open ear. And then breaking news, fake news, whatever it is, rumors. Okay. Earnings, pay attention to earnings. By the way, tomorrow, Friday, we still have some earnings left. Okay. I mean, take a look at this busy schedule. After the close, we have Costco. I look at the Costco earnings. Costco beat earnings. Okay. Costco beat earnings. I don't know. I didn't check the chart, but I saw the price action was a little lower. Okay. Depending on the price action, I was talking to Mandy earlier, depending on the price action, if the price goes lower, guess what? Could still be a buying opportunity if it's on a technical location. Economic events, like I said, the economic indicators are the main driver of price action in the pre-market trading session. And a majority of economic data is released at 8:30 a.m. Eastern, an hour before the New York trading market opens. And the market has about an hour to calibrate. Plus, that's the calibration of the London session that are living through trades and living through that chop. But wait until the market opens because all those contracts that are coming into the market, they're going to create that gyration again, and you're going to have to wait a little longer until the price settles down. Market reaction to the data can cause substantial price moves and set the trading tone for the day. Tomorrow we have actually a lot of economic releases. I have attached it here. We have the average hourly earnings, non-farm employment change, unemployment rate. I don't trade news. I'm not a gambler. If I want to gamble, I go to the casino. I don't gamble. So I like to go for the exact precision, algo reaction, institutional move. Okay. So I trade after 9:30. So I'm going to watch for the reaction at 9:30. If these numbers are going to be good, the market is going to go up. If these numbers are going to go bad, we're going to look at the next support spots. Checklist. You need to have a checklist. And you need to, check when these earnings releases are coming out. And now we're actually phasing out. So now it's not going to have a huge impact. All these releases that are coming out, they're not going to have huge impact. We still have Adobe. We still have some heavy duty stocks that are going to report, but they don't represent a huge influence into the sectors or into the index. So they're not going to gyrate as much. But with April, starting with April, second week of April, we're going to start earnings season, and things are going to start moving again. So keep in mind, keep an eye on earnings. If Google reports earnings, what do you think? And if Google has great earnings, what index do you think is going to move? NASDAQ. So where do you think NASDAQ is going to go if Google outperforms? Higher. Okay, so it's a no-brainer. Trace your levels and trade your plan. Trade and watch NASDAQ, for example, if NASDAQ stocks report. If you have Boeing, Disney, Walmart that are reporting, then obviously you have to watch the Dow. If you're having energy stocks that are reporting earnings, obviously you have to watch the S&P, and so on and so forth. Time frames. Day trading time frames that I use, these are income producing style, meaning you're in and out. They're not going to keep you long in trades, are the 1, 2 minute, 5 minute, 15 minute. Off the open, I trade the 1 and the 2 minute. And as I'm progressing throughout the day, I switch to 5 minute, and then I really eliminate most of the noise and I zoom out on the 15 minute. In swing trading, this is a wealth generation type of activity. I focus on the daily, weekly, monthly, quarterly, and I also sometimes find trades that are setting up on the 1 hour and 4 hour. By the way, today we had a quick trade at GME that already hit target 1. Okay, so GME, we entered the trade at 134. We had a target 1 at 144. $10, boom. Massive trade based on tech analysis. So there are opportunities for the tech markets. I have not seen that volatility. So this is a different kind of volatility than we had with algo volatility in 2018. But if you want to use tick charts, I find that 233 and 512 are a little bit better. I don't recommend using them. I do not like tick charts at all. I don't. But in some cases throughout market volatility, they can be used. But the reason why I don't like them is because I like to go after big profits. And I don't like small stops, small profits, right? Bigger stops, larger stops, huge profits. So I'm into that category. The 1 minute chart should be used from 9:30 to 10 o'clock, the 2 minute from 9:30 to 10 a.m. as well. So these are all in sync. The 5 minute 10 to 11:30, 15 minute from 11:30 to 2 o'clock. Why do you think the 15 minute has to be traded between 11:30 and 2 o'clock? Because this is the doldrum period. If you start trading a 1 minute chart or a tick chart during doldrums, it's not going to work for you. I could guarantee it. Okay. I could tell you right now, try using a tick chart into the doldrums. You're going to find out at the end of the month or at the end of the quarter, because every single test has to be quarterly. You don't test the market or a system a week and say, oh, it's not working. It's for a week. Oh, I tested it a week. Or I tested it for 3 days and I got really bored. It's not working. You have to test it for a month, or at least for at least a month or a quarter. Okay, so usually a quarter, because you have to live through all the cycles for option expirations, for earnings, for all that stuff. Okay, risk to reward. This is very important. So before hitting the buy or the sell button, you have to evaluate risk to reward. So if I would tell you right now, say, hey, you know what, guys, I made $1,500 today on a trade. Would you consider that a bad trade or a good trade? Everybody would say, oh, that's phenomenal because you made money. For a person that is not used to making money, and I had a trader that I mentored, took one of my classes, and he was coming from the Forex environment. He's like, man, I've been trading for like 7 years and never made a penny. It's like, you got to be kidding me. Okay, you got to be kidding me. Like, that's dedication. And there are traders out there that have been trading for 10 years, 20 years, not kidding, and have not made a penny. It's like, you got to be kidding me. And they saw the potential in the market, because if you lose money in the market, you can make money in the market. And that's so intriguing. So then he took the class and he said, oh my God, I'm starting to make money. I was like, of course you are, because now you have the proper knowledge to make money in the market. After the course, he took a trade on his own and he called me. He said like, oh my God, I for the first time I made money in the market. Okay. For the first time I made money in the market. And I said, okay, so what was your entry? What was this out? Walk me through, tell me what you were trading, and he's like, oh, wait a minute. I forgot to tell you that I was so excited. I got up And I went to the kitchen to tell my wife. And then when I came back, the trade was back into break-even territory. So I closed it at break-even, but I was so excited because it went my way. So you can imagine everybody at some point goes through these emotions and you forget, right? So that's why you need to have an automated system. But definitely, if you have someone that is telling you, and in fact, on Twitter, everywhere, there are some individuals that like to post their P&Ls. They go like, oh my God, this is how much I made. So in reality, the success of the trade, of any trade, can only be measured in terms of risk. And asking, how much did you risk to make that money? Because if you risk, let's say $3,000 to make $100, that's not a good formula. Okay. So what is risk? Risk is the amount a trader is willing to lose on a trade. This measure varies from trader to trader, depending on their account size. That's right, depending on the account size. So in the futures market, there's this really huge misconception that if you have, let's say, a $20,000 account, wow, you can trade 2 contracts, standard 2 contracts. And it couldn't be any wrong than this. Because let's say if you have a $20,000 account, you should only be risking 1 or 2% per trade. That's it. 3% if you really know what you're doing. I could go aggressive. I could go as aggressive as 5 or 7% or 10% because I know what I'm doing. Okay. But if you're just starting off in the market, you could even go as low as 0.5% or 1% in the market. So you have a $20,000 account. Okay. If you're risking 1%, that is $200 per trade. Meaning if you have in your budget to take 3 trades a day, which you have to, that is an allocated risk amount for the whole entire day for $600. 200, 200, 200. Okay. And then you need to position size. That's a whole different ball game, because it's not like, oh, here's the entry, I'm going to jump in, right? And I'm only going to risk $200. That is wrong. Okay. That is wrong. You're going to measure your entry and your stop. And that's why it's so important to have an exact entry parameter, an exact stop parameter. So you know the exact distance between entry and the stop, the number of points. And depending on the number of points, you can position size, right? So for example, I'm going to give you just a really quick example. Let's say in NASDAQ, you have a 15-point stop. Okay, you have a 15-point stop. So 50-point stop, right? A point in NASDAQ is $20. So that is $300, for example, right? Now you know that you're only allowed to risk $200. What do you do here? What do you do? You position size. So you cannot take a full-size contract, but you can go ahead and take, for example, 8 micros. So you can fit that $200 in your size. So the success of the trade can only be considered if you take into consideration the risk. Before taking the trade, the trader needs to evaluate the risk and the potential reward. So where's the trade going to run into? If the risk is asymmetric, the trade should be skipped and the trader should wait for a better setup that would provide a better reward for his trade. And there's good risk for the trade. The good risk is for the trade when the trade has the potential to provide 2, 3, or more risk units per reward. So I'm going to give you here an example. This is a trade. I don't even know why I have this green here. That's kind of weird. Anyways. All right. So you guys can see the slide. I have something weird on my screen. Okay. So this is a trade that I have executed this afternoon as I was listening to the wonderful presenters that we had today. Okay. So I kind of found this little trade here, and as I was, waiting, and I was still hanging around the computer, this is a very interesting. This is a very interesting rotation that happened to the upside, and the price got rejected into the 200 SMA, and I got short at 38.05. I had the stop precisely into the 38.10. Okay, 38.10 right here. So you can see here that I pretty much, I got in, no, sorry. My bad. It's 38. This is a mistake right here. It's 38.00 because I had a 10-point stop. Okay, I had a 10-point scalp. There's a 3800. It's not 3805. This is a typo. So I had a target that went, this is my target one that came into 38.92. Okay. I had a second target. It's actually 27 points right here. 25 points. I'm sorry. 25 points I made, not 30. Okay. So I calculated this based on error of typing. All right. This is my target one. My target two, take a look at this. Weekly low, bearish below. This is my target, target two, actually, right here. I don't know what I did. This shows that target three, which is weird. Okay. This is target one. This is target two. And the second dotted line is target three. And I was down at 37.75 as soon as the next rotation kicked in. Okay. So I don't take myself out at targets. Why? Because I'm a professional trader. Okay. I don't see the targets go like, oh my God, I got to get out. I got to get out. You scale out into targets if you have multiple contracts. So for example, let's say if you're using the example that I've used before with position sizing, and say you have a $300 stop, but you can't fit it into your budget with a full size contract, go into micros. And for example, you have 8 micros, you can scale 3 here, 3 here, and you can still live through the rest. And on the when you have a technical rotation, then you are going to exit the trade. You're going to let the market take you out. You're going to play like a hedge fund. You're not going to trade like high time, retail, amateur time. Okay. And then based with the velocity, everybody was like, oh my gosh, the market is going to drop. It's going to look at the notations that we had. And these are the notations that we had before the market opened at 9 o'clock. So we knew exactly what was going to happen in the market, because we knew that if the price is going to go down below this dotted line, you could see it here, support, bearish below. So we knew that we were going to be bearish on this level right here. So any kind of setup that is developing off this level, this is going to be bearish below. This is going to be dotted line. It's going to be target. And this is going to be, look what it says here, support, bullish above. So we're not bearish below here. This is very interesting. And you can see that we had a level at 37.14. Okay. It started to rotate at 37.20. And by the way, 37.20 is an institutional level. This is one of those things that we teach in our class. And then we had the rotation. This is where I got in long. So remember, I shorted it off of that 2 minute, for a quick scalp. And then I went long here at 37.35. I put my stop below this pivot low. And this is my out right here. As soon as I saw the rotation, I was out at 37.55, right? Not a bad trade. Not a bad trade. And if you have any questions, feel free to post them in the room. David, I probably still need like 5 minutes to wrap up here. So I hope that's going to be okay. Right. Yeah. So that's a really nice 20 point pop, right? That's 20-point pop. And for those of you that are not familiar with futures, a point in the S&P is $50. So 20 times 50, that's $1,000. Okay. That's $1,000 per contract. So position sizing will determine how many contracts you're going to take the trade with according to your account size and daily loss limit. Position sizing should be determined by your account size and risk tolerance. So for example, if you have a $50,000 account, if you decide to trade 1% per trade, that's $500 per trade. So remember that within a day, you have to have enough ammunition. Okay. You have to have enough ammunition so you can go after the trade, because if you start the day with a losing trade, then guess what? Okay. Guess what? You need to go and get your money back. All right. So your risk per day is $1,500. That's how much money you budget. And you always have to risk money that really doesn't demoralize you, that doesn't affect you psychologically and say, oh my God, I risked so much money. Okay. Jennifer, the question, why do you need 2 hours? Is that researching or trading per day? Well, I allocate because you need to have pattern development. Pattern doesn't develop in 5 minutes. Sometimes it does, sometimes it doesn't. So you need to have this full cycle from 9:30 till about 11:30. And this is the overlap of the London session with the European session. So you have to wait for pattern formation. Okay. So I just trade those 2 hours. Those 2 hours are, you can trade actually the system that I trade and I teach. You could trade it like all day, all day. But you need the pattern formation, because when I'm coming in front of the computer at 9 o'clock, like I said, I don't trade from 9 o'clock to 9:30. I gather all my intel. And then when the market opens, the market doesn't just open and boom, I'm in a trade. No, I have to evaluate the trade and say, is it rotating? Do we have momentum? Do we have volume? Do we have all the other criteria? So you have to do a lot of evaluation before you get into a trade in order to have that 92% win ratio that I have. So Lynn, that's a great question. How do you say your trailing stop? You do it manually, Lynn. There is not one system in existence that is going to provide you with a fantastic trailing stop. You need to have a good trailing system in place based on the resistance and confluence levels that you have, resistance or support. So if the trade is going higher, for example, there are different trailing methods that you can apply. I teach 3 trailing methods, and the trailing is done by momentum and by pattern. And for example, if you can trade either with one contract, whether full size or a micro, or you could trade with multiple contracts, but you're going to be using different strategies. For example, if you're trailing with multiple contracts, you're going to ease into each target. So at each target, you're going to trim some. When you are going to stay with the last lot is always you let your winners run, and you're going to let the price take you out. So as soon as you see a technical rotation, Lynn, you're going to exit. So for example, here in the trade that I've done this afternoon, okay, so this was this was my buy area. This is my entry. This is my stop. Okay. Yes, Tony, it works on everything you want to trade, whether it's cryptos, whether it is stocks, whether it is European indices, or anything on the planet, from uranium to oil to indices to Apple and Google to anything on the planet, to Forex. It works anything. And Forex is, I do have a lot of traders that come from, that want to learn how to trade Forex. I teach them the future system, and I have a private session with them to tweak them some timeframes. That's all I do with them, to tweak some timeframes, because those timeframes, they have to use different timeframes than they use for futures. That's the only difference. So when it comes to these rotations here that you see, Lynn, so this is my entry. This is my entry bar. I always look for rotations. Rotation is price confirmation, is the most basic element. I never buy on support, because the support is the last safety net. So if you're having a bearish momentum, you need to know how to read momentum. I could show you, and the market is not open right now, or it opened, but it's too slow right now to show you momentum. I show in the trading room all the time how to read momentum, and they go like, are you kidding me? Is it that easy? It is. It's all about watching price. That's it. And you can see here the price went down, and you have 1, 2, 3, 4. And if you have the 1, 2, 3, 4 down, you have the technical rotation. This is your entry, exact entry. This is where you see this win bar. This is called a win bar. You see how this win bar kicked in with a little bit more volume than the prior bar? This is the green bar that executed the rotation, and this is the bar that was setting the rotation. Okay, so you can see it went up. Look at the volume decreased because we had the win, W-I-N, win. Okay, it's nothing else, Jennifer. Don't be hooked on the name. It's just a big green bar. Okay. And yeah, and this is a bull bar, or if we would have had like a big red bar, it would have been a bear bar. No big deal. Just remember, big bar. That's it. But the big bars have to be, Big Bird comes to mind. Okay. But definitely they have to come up with volume, right? So you can see here that the price was stuck. Yeah. No. Listen, when I teach my training classes, I just teach like simple concepts like topping tails, bottoming tails, no hanging mans, no morning stars, and all those names. No. It's just really, it's something that you would remember it, because sometimes, you have to have, the right it's easier to identify it if you remember without having to remember silly names for it. Okay, so back to trailing, you can see here that the price moved higher, and this was on my radar here because I didn't really want to, I really wanted to watch price action to see if the trade would work or not. And what happened here is that we ran into this 10 EMA. Usually, remember what I said when I was talking to Mandy, the price is always going to be attracted into these magnets. These moving averages are magnets, and look how much it stayed here. So it stayed here for about 10 minutes. At this point, when the price started to go a little bit against the directional bias that I was in, I locked in break even because I didn't want to lose. So I locked in break even. So I was breaking in a very comfortable area where I couldn't lose anything. And then once I got the next rotation in, I got in a little bit more. So I was in here with one lot. I added one more lot here. I placed my stop under these lows right here, and I started to move higher. When the price started to roll here, you could see that I took some profits into this resistance. I didn't take profits at the top because, hey, I cannot guess tops and bottoms. Nobody can. If they're saying that, hey, I can read an exact top or an exact bottom, they're lying. They can read the area, but you cannot nail that top. There was no indication at this point that we were not going to make a new high, but there was an indication that if the price is going to trade below this low right here, it's going to start turning around. So this was my exit point right here. So you're going to trail in you're going to trail based on price action. That's it. And there are three methods you can trail. We teach this in our classes. We don't really have enough time today. Danny, what additional criteria to consider to take a rotation trade? You need to be in an ongoing trend. This is rule number one. Second of all, it needs to be on an area of confluence, or at least in an area of heavy duty support, like it was here, like in this particular area. So here I was watching for a rotation because you can see that this is a 5-minute chart. So 5, 10, 15, 20, 25, 30, 35 minutes, we were just, I would say bottoming, consolidating here. So any pop, you can see here that this could have been a very well a rotation. So I was eyeing that because this could have been, okay, here, okay, this was a really nice breakout pattern, right? And it was bullish above and it was bearish below, right? And it was bullish above and bearish below. Yeah. So that's the kind of criteria that you need to look for. Okay. All right. So do you want to learn how to trade and find winning trades? Roll up your sleeves and learn how to trade. I don't know. This is Boris Johnson right here. I wanted to find a picture with, someone that is sitting on the computer, rolling his sleeve, getting ready to trade. This guy, I don't know. Maybe this guy found that buying the dip thing, right? So he was buying the dip right here. Okay, so we teach and trade every day live, highly successful technical system. We have members in room in our education program that are exhilarated to be trading with us. And we don't follow actually institutional money flow. We actually trade with the institutional money flow in the first 2 hours. That enables us to profit from momentum moves. And here's the catch: at specific times, Tony, oh boy, yeah. Specific times, locations, and precise technical patterns. Do you know who else trades like this? Algos. Algos fire at specific times. Algos fire at specific locations. Algos fire with precise technical patterns. So our method overrides any kind of news event, artificial indicator, earnings, dark pools, unusual activity, etc. Okay. So we have 2 offers for you guys tonight. And this is pretty much what I have presented. I'm going to go through those. You get the idea. Everybody's happy. Okay. So I'm not going to keep you here any longer. I do run a trading room every day from 9 o'clock until 12 o'clock, or almost into 12 o'clock, or sometimes even beyond 12 o'clock. It depends on the life of the trade. So you're going to get you're going to get this live stream. You're going to look at charts. You're going to have all the levels on your charts with actionable trading ideas already built into charts. So when you log into the room at 9 o'clock, you're going to go like, oh, wow, okay, this is the buy area, this is the stop area. So you already have an idea before I even come on the mic of what kind of day we're going to have, bullish or bearish, because you're going to see this, you're going to see whether it's bullish above or bearish below, or where support is and what the plan action is for that. I trade, like I said, live. I'm on air. I come on the mic around 9:15 or so on heavy volatility market. I wait a little longer because I want to see a little bit of more calibration and pattern formation before I come on the mic. So I trade. So I am in the zone and watch without any kind of distractions. Constant multiple markets. We do the analysis. We do have a lot of members into our trading room that are focused 100% on trading. We barely talk in the first hour and a half because we are all focused on 100% trading. I call all the trades with exact entry stops targets. I do the management for the trade. I'm on the mic all the time, every second. If you want to join the trading room, like I said, we do real-time precise trading. It's 100% guided. So we tell you exactly what you need to do. The only thing that you need to do yourself is to position size, and we provide you the education for that. We send you an e-course, it's a video course. It's a video course, and actually we had 5 members in the trading room, dedicated members, so you can see how much our members love being in the room and understand the concept of position sizing. They have developed the most awesome, the most incredible, the awesomest position size calculator that I have ever seen. And you guys have access to that. It is just finalized. So today, final touches. It went through 5 hands. Like I said, it is a work of love and labor. It was incredible. And you guys are going to have access to it. I cannot take credit for that. They created it for all the traders in the room. We have a huge community of traders in the room, huge. You get a real-time response to your questions, obviously, after we're done trading, because our #1 objective every day is to make money. You have lectures and mentoring throughout, throughout the trading sessions. And especially we do these lectures when the price action is slow, or when you're having choppy price action, garbage action, when we do not identify anything to trade. We use the time to teach lectures, mentoring, how to read price action, how to read the trend, how to read trend reversal, and all that fun stuff. Trading room hours, 9 to 12. We have pre-market game plan that is usually starts at around 9:15 to 9:20. We have a private feed, which is very important because if, for example, we have a swing trade that is ongoing, you're going to receive update on that private stream. We have live portfolio performance. This is a live access to a document that is more than performance. You get risk charts for full size and for micros. You get market holiday calendar. You get roll dates, trading guidelines. We help you with everything we can. We have like a lot of tabs at the bottom that you need to go through, and there are a lot of helping tools that you're getting with this. Like I said, mini lessons, position size and the risk video class. We do all the work for you. Your only responsibility is sizing for the trade based on your account size. That's it, because I don't know what your account size you have. Because if I would know for everyone in the room, I would tell everyone in the room how many contracts they need to take the trade with. But I can't do that. So Futures Live Trading Room, like I said, you're going to get the bonus of the position sizing money management video course, which is priced at $1,000. We also teach that in our class. Risk size for indices and commodities, which is waived, trading guidelines, which is waived, and the membership is $299 a month. We do offer annual memberships as well, and with the annual membership, we cut 2 months out of it, so you're getting $600 off. Basically, you trade 2 months for free within a year. Most of the members, what they do, they sign up for a month and then they join the annual. They're really hooked into the program. We have a lot of fun. And of course, if you want to learn how it's done, we have a class. It's called the Power Income Day Trading Course. The next class is March 22nd to 26th. We do have an early bird where we offer you 3 months live in the trading room. And you're also going to receive a 1-day live trading lab recording, which if you have never placed a trade before, or you don't know what, how to place an order, or let's see, what we teach. I don't know, everything that is chart related, how to set up the platform, what you need to have, how to read price action, how to trace the levels and all that fun stuff. So all that is into the trading lab. How to trail trades, how to, everything that is technically related to executing a trade. The price tuition is $49.95. Since we came on the market in 2015 with this course, we have had it priced at the same price of $4,997 actually, and the price will go up soon to $69.99. If you guys are interested, you can go to our website and hover over education under the futures course and find out more details of what we teach with it. All the courses are live, always live. There's no such thing as learning from a book or a DVD or anything that is recorded. We only do it live. There's a lot of effort and time that goes into this. And so we do it live. You also are going to receive the recordings. They're yours to keep forever. We don't constrain you to have access only 2 months or 3 months or whatever. No, they're yours forever. I think one of the biggest things is that you're going to have retakes, free retakes for lifetime. So every time when we're going to do the class, you guys are going to be invited to take it free of charge. And we highly recommend that at least you come for 5, 6, 7, 10. Our most successful traders that are literally making 3 digits right now, that started last year trading and they were making already 3 digits. 5 digits is very common. Everybody's making 5 digits with small accounts, medium to small accounts. So I'm not kidding you. If you guys want to learn more, head on to our website. And this is a wrap.